Good day, everybody. It's Trent Klarenbach with the Klarenbach Special Crops Report. Today is October the 31st, 2025. It's been a period of time since we have looked at large green lentils, and the reason is that large green lentil video I did with David Nobbs and that three-part special crop series still is relevant today. Price of lentils haven't done much since that point in time, and there hasn't been much to report on, in my opinion. So you can watch the video, look at the current price, and the analysis has held up to this point. Just a quick review here. This is the monthly chart of the Klarenbach Price Index for Saskatchewan delivered plant, and I would argue that we're finding some sort of support from that 25-cent level. Now this is an index price, so your price you can actually receive is sometimes above this level, sometimes below this level. The important thing is to understand is the trend, and when a price signal sells or we see support levels or resistance levels on the index, take that into consideration regardless whether the price you can receive is greater or lower than the index price. So right now I'd argue we're seeing some sort of support from this around this 25-cent level. So got down as low as 23, 25. I think we're trading around that 26 cents today on the index. And it's an interesting level. It's a Fibonacci level. So that's why we had that on our radar as maybe a possible support level. There's also support down in this as you get lower down to 18 cents, through, of course, 20 cents, the round number. That's going to act as some sort of support. Also, I anticipate a whole lot of activity between 22, 23 down to, well, I guess I'd say 18 cents for sure, maybe even lower. So it's probably, I think the downtrend is still intact. I just, I think there's some limitations possibly to how low this price can go. You can see we're extended from our moving averages, and the green one's a 50-month moving average, and we're quite extended from that, but I think the time frame is just a bit too long to pay too much attention to the moving averages. But down here I have this head and shoulders measured move. I first published that back in August. Looked at a left shoulder head, right shoulder from this peak up here back in 2024. You do a measured move price target, and that suggests that the price is going down to 11 cents a pound. Now, I don't think you have to get too alarmed that it's going to happen this month, this week, or maybe even this crop year, but you want to be cognizant that prices can go a lot lower than you want, hope, or desire them to be. So just be cognizant of that. But you got to get through that 20-cent level. Got to get through this 18-cent level before that happens. Right now we're at 26, but I want you to be aware that prices can go lower than you anticipate. So this is the weekly chart, and this is where it kind of gets a little bit more interesting for me. So it's a line chart, so I don't have the daily data. I work off of the weekly data, and you can see this red line here represents the 10-week moving average. We got back above there a couple weeks ago, back in early October, and now the price is pulled back, or the index price is pulled back, and we're kind of testing that 10-week moving average. Where this gets interesting to me is when we cross that 10-week moving average in the past, it's led to some sort of price rally, okay? So it did back here in 2018, again here in 19, it just kind of keeps doing that. Doesn't mean the price doesn't go down, but you can often get a good little move, a little shake out of that crossing above the 10-week moving average. Now I prefer the 10-week moving average was already advancing, rising for a sustained move. However, regardless, when it's been in decline, we crossed it, it's often led to a rally in the price. So if that happens, how high can we go? We're at 26 cents now. My chart suggests there could be another 4 or 5 cents move in the market. So you balance those ideas and those probabilities against what your cash flow needs are and ability to deliver. But right now I'm really interested to see how the price holds up to this 25-cent level, and if this recent rally above the 10-week leads to something more in the next coming months, coming weeks. It could, yeah. That's what I'm looking at right now. So it's kind of a little bit of a mixed bag of nuts. But I mean, if you're looking for signs of hope, this is the best sign that I have at my disposal today. But you manage your cash flow. I encourage people to sell by the acre, not by the pound. If you're profitable, this could be a good opportunity to book some of those profits and make up for some of the ground on crops that you might not have profits on. So a bit of hope. 25 cents is a key level for me. We break below that, then I start looking at 20 cents and 18 cents. And again, we break below 18, then I start looking at 11. But we're at 26 right now. Possibility of a rally from here up to, another 4 or 5 cents. My index getting up to that 30, 31 cent level. So keep that in mind. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.